Good morning and welcome to today's edition of the London Session Open. Today is October 17th, 2019, and it's 20 minutes until 8 a.m. in London. Let's begin by talking a bit about the pound. Pound is actually slightly lower just now. Been down since pretty much 6 a.m. There was, I think the market itself needed to correct a bit. It is in an uptrend. And I was hoping for a steeper correction before heading higher, but unfortunately missed that out. Uh, Going forward, at least in the short term, the trend will remain bullish above this low level here. That's the 126 level. And what happened here? So we needed to go down a bit on just profit taking, which makes perfect sense. But then as well, there were some headlines right now, at least on the Financial Times, that the Northern Ireland's DUP rejects Boris Johnson's latest Brexit plan. So the DUP, as you know, they are the ones that are in control. Well, the Northern Ireland party that is supporting Boris Johnson and his government. And without their votes, I mean, even with their votes, it was going to be difficult to begin with, because the vibes right now, the way this is looking, is a bit like when Theresa May had like a breakthrough with the EU, and then when she went back, she got that deal rejected 3 times, right? So it's a little bit like here, where Boris Johnson has now some sort of a plan, and things looks to be going good with the EU. But at least according to the latest headlines here, there's indication here that the DUP is not going to support it. So what's happening here, as you might understand, is that this whole move here, could potentially just go away if it's a case now that they don't get the deal through. But we'll see what happens. I think my base scenario is still that we might and most likely will have a general election, and that's going to be sorted by next month. And then after that, um, we'll see what happens. The demographics have changed since the Brexit vote. But the general election is going to give us a general indication. The problem right now with all the polls and everything is that you can't really trust them anymore, can you? Like, they don't give an accurate picture of what the UK population thinks, so it's actually going to be quite random, I think. Trading this in the short term, though, there's nothing random about this. This is just a healthy uptrend, and the trend is bullish by 126.05. And it could be that if we go back down to these levels around support, maybe 27.18, 27, that some people might look to buy and then push to the upside. Euro versus the dollar. So euro versus the dollar, a few days ago we said the trend was bullish above this level down here, and the market actually went down lower, even triggered small head and shoulders, but then pushed upwards. So the trend continues to be bullish. Congratulations if you traded this. I was actually short myself from 110.50 based on a different trading system than this one. But when the market went back up here, I closed that out. What I was betting on there is a totally different system, and I was betting on this section here to hold. Now, looking at this today, the trend remains bullish, and there's no real reason to change, at least not for now. The market is cutting through these resistance levels, which should have held as support, but obviously they're not. There is a risk, I think. We might go a bit higher. I think maybe 111.50, 112. In the longer run, though, I still think we're going to go lower. As for this, at least in the short term now, it's no secret that the market had a nice little go to the upside yesterday, and we could easily have a bit of correction today. Put some fibs from the low to the high. You get all these 3 different fibs. I think if we would go down to a level between the 50 and 38.2 level, we might see some support. I think we can even reduce the trend funding level a tiny bit to 110, because you got the 4th fib here, which is a 78.6 level, and the market should not really trade as low if this is a genuine uptrend. So a little bit of a pullback, I think minimum the 1st fib, and then we'll see if it wants to go upwards. Dollar versus the Japanese yen. So this market, it actually traded above my trend following level, and it took out that high that we discussed. When it took out that high, which was the 108.63 level, then the market could continue to rally upwards and potentially reach the next high, which is up here, which is the July 31st high. And here, I'm not very confident in this, but you have a double bottom here, and the market is just above the breakup points here. I would not buy on the breakup point because if you buy here, if we reach target, you still need to have a stop probably down here at 108.02. So your reward ratio is going to be just 1 to 1. So it's only if you're very, very confident. I would prefer a little pullback. You see these highs here? That little spot is the let me see if it's the right one. Yes, this is 108.46 level. That improves risk reward ratio a bit. We'll improve it to almost almost 2 times, so 1.91. Crude oil, what's going on here? Not much. So this is the boring part with the sideways market. It is sideways between trend sideways, I think between the June low and July high. And when the market is trending sideways, it just tells you that there's no trend. So sometimes the price will, bounce and quickly go to the middle. This time it's taking a bit longer. So last time we said we're probably going to bounce from here and go up to the midpoint. It missed the midpoint with a few dollars, and now it's back down to support. And for now, I'll remain bullish. This because it's so stagnant here. I wouldn't really trust this low too much. I think you need to focus more on the 50, 52 level. If you already entered a position here with the help of that one, there's nothing wrong to scale down a bit because we're pretty much at entry. For example, if you need to push this down a bit, one can always reduce the sizing a bit. And that's it really to manage the risk. Gold prices. Over the last few weeks, I said that the price is going to go down. It went down 1, 2 times. And then we reached that 1480 level we reached it on the 11th. And we've been trading here on the 15th. Also in the early of October 16th, which is yesterday. And I continue to be bearish for now. And I think that the market might roll over again around 1506 and a half, and that the trend will remain bearish below 1519. So I think between these two levels, the market might roll over again. But you need to be warned, be careful here though, because you can see volatility is contracting. And in general, if you just zoom out here, you'll see that the overall trend is bullish. So it's more likely that we're going to take out this high at one point. Take out that trend line, sorry, and then we'll be rallying all the way upwards. And what will happen at that point, I'm going to turn bullish, and then I'll say market's probably going to be bought on dips. S&P 500. So this one remains in a short-term uptrend. It hasn't really moved too far from the median line. So if you look at it from a bigger picture perspective, this is a big pitchfork. It's not of the best quality though, because it doesn't, not very old. It's actually drawn from levels from the April high to the June low. Now, as I said before, you get 1, 2, 3, 4, 5. Actually, if I look like that, you have more. One bounce off, 1, 2, 3, 4, 5, 6. I guess 7. Well, 7 touch points where this median line has mattered. And the problem here though is that the median lines are not the most important level, so most interesting to trade is when we're at the extremes. In either case, have a few times where the price actually bounced off here, and we did it bounce off initially, on October 11th. And my idea at that point was that the market was gonna go down and then upwards. My preferred trade idea is still to buy at 29.40, 24.5, between that level and this level here, which is 28.80. But the short-term trend sometimes what happens is that the market just goes like this, right? You have a very, very big strong move, and then suddenly sort of volatility lowers, and then you just get stuck in an uptrend for about a month or two. So that's what this is all about. Because in the very short term, the trend is bullish about 2952.6, which is the low here from October 14th. And if we go down here, we might go down and then up again. If that doesn't hold this level, we can decline from here to here and then down here. That's what I would look to be bullish. German DAX, what's going on here? Very, very bullish. This is the prior, well, this is actually the new 2019 high. Actually, I need to push it out. This is the new 2019 high. And we are also, if you look at this, we're stuck in a big triangle. And we just broke out on the weekly. If we close at these levels, we will have a successful breakout. And if you follow the textbook, then you should get ready for a 24% gain. Now, what is quite interesting is not just this market is bullish. You have the Italian stock market, you have the French stock market. They all look a bit different, though. Those markets are more stuck in rectangles, which are actually better quality patterns than these ones. And even something like the S&P 500. I mean, if you look from a bigger picture perspective, if we take out the 2019 high, we could potentially go much, much, much higher. So that is the German DAX. This is the German DAX, by the way, sort of just on the weekly. You can see we're taking out quite some significant levels. So should we all go along here? I don't think so. I think realistically, we're just going to continue to all be in trading choppy. Like CAC 40 is not the first time it has a potential breakout. The Euro Stoxx 50 as well. And the markets, what they're pricing in here, they're pricing in sort of a good economic recovery or so. And I'm not sure if that's correct. We'll see what happens. They say that the stock markets climb on a wall of worry, and that's true. Most of the time the markets go up, and everybody's always worried about something. And in hindsight, why were you worried? The reason why people are worried is that people don't like to be caught in massive declines like this one here. I just want this one, for example. And then the end market decline was 30%. And here the market decline 30%. Then about here to October 2017, I think already in April 2018, around this time, the world economy, especially the US, was doing really good. But people, of course, want to avoid that. And not everybody, but there's a lot of talk, and there's always been a lot of talk about the fact that you had so many years ago, we had that big decline in the markets, with the markets declined 56%. US stock markets and declined by S&P declined by 57 at the time, and people say, all right, this uptrend is mature and so on and so on. So people will be worried about that. So let's not make it very complicated for us. What do we know about this? Well, we know that we're in an uptrend, right? So where is the last important low? It's down here at the 12,391. And if you take fibs like that, then maybe you'll have yourself a 50% correction or so. And that level would be this level here. And that wouldn't be unsurprising if we actually move down to these levels. Not that we have to go down, and not that we should short, more that the risk-reward ratio for further upside is good here. Okay, this concludes today's market update. Make sure, guys, that you do subscribe to the ATFX YouTube channel. On that channel, I'm recording these market updates now. I'm not doing the webinars live now because they clash with the production of articles that I do for investingcube.com. So we're doing these live not live, a recording on ATFX YouTube channel.
That's the best way as well. My phone is heading for repair, so if you are on the WhatsApp channel, then I'm gonna be offline on that phone number for at least a week or so, um, because I have a dual SIM phone right now, but um, I'm going to replace that with a single chip phone right now, as the other one is under repair. So I won't be able to send you messages for about a week on the free channel, free WhatsApp channel. But don't be alarmed, I'll be back 1 to 2 weeks. My phone just needs to go far away to get repaired. All right, guys, have a good trading day, and see you guys on Twitter or on investingq.com. Thank you, and bye bye.